Welcome back, Alpha Hunters. Okay, so I'm imagining a lot of people are feeling a little freaked out. I can imagine. It's not too often we get a 3% plus down day on the SPY or the SP 500. And we saw that basically not even off a gap down, but pretty much on a pretty flat open. We just traded down the whole day. And really, what the catalyst was the Fed chairman giving a press conference at the Jackson Hole Summit Friday morning, 30 minutes after the open. So, we're going to talk a little bit about what went on this week and kind of what to expect here over the next 2 weeks. Don't panic. Don't panic. It's okay. Just get your game plan ready, okay? And so let's look at it. So the intraday action for the week was pretty much this. It was a nice little gap down on Monday, and we traded lower. Monday was pretty bearish. We actually was down. Oh man, I think it was a 2% gap down on the market. No, it wasn't quite. Maybe we ended down 2% that day. Yeah, we went down a little bit over 2% on Monday. But we pretty much gapped down below this 417.50 price level, and I put out a message saying, "Hey, this is pretty bearish." But I wasn't saying I was going to get bearish on Monday. It was kind of more of I still had the same methodology going into last week. I thought we'd kind of come down if we go back to a daily. I thought we were going to try and consolidate and push higher off this 10 exponential moving average and then break down. But that wound up being the same kind of pattern that we had play out this week. We just did it at a much lower price level than what I thought we were going to do. So if we're back here at the 15-minute intraday time period, you saw that we just kind of traded down roughly into about the 412 to 414, 415 type price zone. And we were there for a good part of Monday, pretty much all of Tuesday and Wednesday. And then we saw some bullishness actually come into the market on Thursday as a lot of people were trying to front run, thinking the Fed was going to overturn their aggressive stance on interest rates and increasing the interest rates to combat inflation. And I was not in that camp. And I kept saying to people, especially on Thursday's price action, that, there's no reason to flip your decision to say, yeah, the Fed should be less aggressive on interest rates due to the simple fact that they have not said that they are not going to combat inflation first. Okay. They have been inflation first focused pretty much for the past several months. They have been very consistent on talking about that. They will raise rates to combat inflation, to get inflation down to 2%. So we saw some bullishness come in on Thursday, and then Friday morning was very quiet for the first 30 minutes. These are the 15-minute candles that were Friday morning. It was very quiet, not much going on. And then Friday morning, you kind of just see it. We just, once the Fed chairman got done talking, just sell all the way down. It was really kind of a bloodfest out there. I didn't think we would sell down this hard, but we sold down really hard pretty much all day. But what he kind of talked about in his press conference was, we don't want to damage the economy, but if that happens, then they will damage the economy and the jobs market to get inflation back down to their 2% target. Okay, that's where they want inflation to be on the long term. And so you got to take what they're saying as, okay, I need to protect capital. And that's what you saw. You saw people come out of the market as they are protecting capital. All this selling was people protecting capital. And I've kind of been talking about it for a few weeks. Like, you need to be buying your put options, protecting your portfolio, buying bearish positions, because we're probably going to go back bearish because there's no reason to think that the Fed was really going to change their mind. And they really haven't conveyed that message even still this morning. Well, Thursday, there was a lot of interviews coming out with a bunch of the other Fed presidents, and they were all saying the same thing, that the Fed is focused on inflation and not so much worried about the economy and jobs. They're monitoring it, and if they can help out there, they can. Their main focus is inflation. So if they damage the economy and the jobs market, they will, to bring inflation down. It's just kind of one of the things that they've been reiterating. Okay. The interesting thing, though, is kind of how the pattern has set up here on the daily picture. Okay. We have come back down. We found support. We tried to push higher and we rejected. Okay. This is the same kind of pattern that we saw in the beginning of April kind of play out, where we tried to bounce and we rejected back over here also. And these are the kind of patterns that you look for in bearish markets, where you try to get a bounce off a consolidated pattern and it rejects. Okay. And this actually played out last week. I just didn't call it out because on intraday time periods, you don't see them all that often, and they're not as strong as they are on daily time frames. But we did see one last week with last week's high. We had this gap down on, I believe that was Wednesday, Thursday, and then we tried to curl up here, and then we rejected. Now this spot right here, this is just the Fed talking, and so the market was really kind of just whipsawy. So it went to a price level and it came right back down to the previous price level. So I just kind of ignored that. I don't typically ignore them. And the other way you could actually draw it is we came down to a price level, we tried to bounce and we rejected, and then we wound up breaking lower. So you can break it down kind of either way. Chose not to really in my analysis. So I figured I'd just wait until we got a more clear one. And the one that we got played out this week was very, very clear. So that is kind of what went on this week and what kind of pattern set up. I have been calling for this pattern, and I've been looking forward. If you've been in the live day trading rooms in the afternoon, 2 p.m. Eastern, I've been looking for it. I kind of thought we would get it this week, and we got it. I mean, we nailed this. So bearish positions are sitting pretty good. That doesn't help anybody. Everybody's wanting to know what we do now. Okay. We have a lot of strong support down here at this 400 horizontal line. Okay. This 400 price level. And we also have the trending line going up here. Okay. That upward trending line, that goes all the way back to 2009. And basically the beginning of the bull run that we've been on. Okay. So what I would expect here is over the next week, let's just kind of come down and consolidate into this zone. Don't worry about the timeline of I'm drawing this out, but I would expect here in about 2 weeks, we probably try to start bouncing higher, 2-3 weeks maybe, and try to make a run back to the bottom of the low that we put in before today. So basically Wednesday's low, somewhere around the 409 to 412 price area. I'd expect we make a run up to there here in a couple weeks, and we'll probably just reject again. And that'll probably be the last big one. Okay, so it usually does play out that way, where you get one on an intraday time frame, and then you get one of these on a daily time frame, and then you get it to kind of show up on a weekly time frame. Okay, and if you look back at the one in the beginning of April, what you'll notice is when we got this daily breakdown, we went and we kind of set one up on a weekly, and then we rejected. Now, the interesting thing is the peak where we came back right at where we rejected was the low of the previous kind of base area. So that's kind of what I'm thinking as far as kind of how it's going to play out here over the next 2 weeks. I think it'll be something very similar to that. But I think anything in the 409 to 412 area as we start to bounce up into there over the next two weeks, 3 weeks, probably be the best way to play it for bearish positions if you haven't got bearish positions already. But if you've been watching this channel, you kind of know that I've been very much saying that you should have been getting in bearish basically last week. So that's kind of where I'm going to leave it for the week. There's a lot. I know there's a lot of people just kind of freaking out. Especially when you come in and see days like this. And last week, we were kind of still feeling good about the bullishness in the market. Honestly, a lot of people were still feeling really good. We had just come off a 2-month rally. Basically, that was going to be the end of it, right? We just came into a really solid support resistance area. So you kind of come in and see it in days like this again, it kind of just gives you flashbacks to NAM or April or May. So yeah, it's a little scary one. I don't think there's any reason to panic. I mean, just because there was so much selling today, I mean, you're not going to expect to see another 3% down day. Again, probably anytime early next week. I wouldn't expect to see it. If we just start selling down, I mean, I could guess that's probably like one of the only cases where I could see where you want to pick up a small bearish position just in case we do. But I would expect to see some kind of consolidation bounce, retest into that low around the 409 to 412 type area, and we reject and go lower. The 400 low will be pretty strong. I also think the 390 area will be pretty strong. So we got a little double top back into here, and we were tested there before we went on a really strong run. Also back in July, late July. So there's going to be some choppiness in here, definitely as we make our way lower. But if you've been following along, you were snagging some bearish positions, and you're feeling pretty good about yourself. So I hope a lot of you guys are feeling really good about yourself, having a great weekend, because I know I'm gonna be sipping on some margaritas, guys. But that's really all I got to share this week. I'm gonna keep it short and sweet. I got some obligations later on Friday night, so I'm gonna need sure to get this out. But I just wanted to stick to just what's going on with the SPY and the market. The Q is probably the same thing, but the Qs look a little weaker. So yeah, that and Apple had a pretty big breakdown today, so that position's also looking pretty well. So yeah, just be cautious. You know, there's no reason to be panicking. I think over 2 weeks, if today really freaked you out, I'm pretty confident over 2 weeks we'll probably be back around that 410 zone. And if you want to buy protection, then you buy some protection then. So have a great weekend, everybody. All right, take care, Alpha Hunters.